So trade signals are a huge thing in crypto. They've been around, especially in the forex world, for quite a while, right? Trade signal providers, and you see a ton of outfits providing general information against market forces that are effectively buy and sell signals, right, on different cryptocurrencies, and that's a trade signal provider. There's no legal definition of trade signal provider or technology provider. A technology provider would be a exactly what it says, a technology provider, a software provider who takes trade signals and then either delivers the trade signals or executes a trade on your behalf. Those all kind of fall under the same definition of what, for purposes of right now, we'll just consider trade signal providers. And the question of legality in the crypto space is really kind of up in the air, like the question of legality in the crypto space for basically everything is sort of up in the air. But it's a two-part it's really a four-part analysis with two competing sets of laws: securities and commodities. And right now, we'll just deal with securities, and tomorrow I'll hit the commodities end of it. But your main concern as a trade signal provider in the securities arena is the Investment Advisors Act of 1940, right? And that requires investment, quote unquote, investment advisors to register with the SEC. And I'll read exactly what the definition of an investment advisor is, which is a person for compensation who engages in the business of advising others, either directly or indirectly through publications or writings, as to the value of securities or as to the advisability of investing in, purchasing, or selling securities. Okay, it's a mouthful, but first things first, are we dealing with securities? Because if we aren't dealing with securities, then the Investment Advisor Act doesn't apply. So now we go back to this fundamental issue that we have with U.S. securities laws, right? Is a particular cryptocurrency a security? And as I'll detail in my next video, Bitcoin, Ethereum, most cryptocurrencies actually are deemed to be commodities. And so to the extent that you're providing signals on, say, Bitcoin or Ethereum, those are commodities. The Investment Advisor Act of 1940 does not apply. And then, obviously, no registration under the registration as an investment advisor. But we get into the STO arena, or we get into some of these ICOs where you have some specious grounds, right? Where is this in fact a security, right? And so the question becomes, out of safety, assuming for argument's sake alone, let's say that I'm going to offer trade signals on what either as a security token or an ICO token, which is on the fence, right? It's in that gray area. Okay. And do I have to register? Because in function, as a trade signal provider, you are advising others, right? You are advising others as to the purchase or sale of this cryptocurrency. And if it's a security, then by definition, you're acting as an investment advisor. But there's exemptions, many exemptions to registration. One of them is the publisher exemption, right? And this kind of goes back to the days where stock newsletters were very big, right? You used to see these, like they used to come in huge binders, and they were exempt from investment advisor registration because of this publisher's exemption, right? And now, to qualify for this exemption from registration as an investment advisor, a couple things. One, you can only provide, quote unquote, impersonal advice, right? Meaning the advice that you provide, the trade signals you provide, cannot be tailored to a specific client. So you sort of have to provide a general, right, to the market at large or to your clientele at large, as opposed to tailoring one's particular portfolio. You have to provide this sort of general advice. You can't tailor your advice or be tailoring your advice to specific clients, right, into their situations. Just think of like a financial advisor, your CFP, right, what they would do. Okay, they're mostly investment advisors. You can't tailor your advice. Your trade signals have to be sort of general in nature, right? Dictating market forces, buy and sell signals, things like that. And two, the trade signal has to be bona fide, right? It can't be promotional. So in the sense that you are, let's say, promoting an ICO token, right? And this is huge on YouTube. You see this all the time. You see people out there like, buy this, buy that, ICO, I'm into this ICO, this ICO. Well, in essence, they're acting as investment advisors, and they're unlicensed investment advisors because they're not providing bona fide advice. They're providing trade signals, right? The investment recommendation to purchase that ICO, but they're being paid to do it, or they were paid to do it, right? So it can't be promotional, right? You can be paid to provide the signal, but you can't be paid by the promoter of the ICO, right, or that coin or that token to offer the advice, right? So that's huge. And then 3, your publishing has to be of general and regular circulation, and I'm quoting again, right? So instead of like sporadic sort of, you have to be engaged in the business. Instead of like saying, I'm going to do it here, I'm going to do it here, I'm going to do it in response to like one-off market forces, you actually have to be engaged on a consistent and regular basis in providing those trade signals. So if you meet those 3 qualifications, right, not tailoring your advice to a particular client, bona fide, non-promotional trade signal provision, and regular publishing, right, not time to time, you're going to meet that publisher exemption. So irrespective of the fact, right, irrespective of what you're dealing, what cryptocurrency you're dealing with, and I would argue, and I'll get into the next video, Bitcoin and Ethereum, those are commodities. That's a whole nother bag, which we'll have to get into. But like, let's think ICO tokens and of course STO tokens. If you're worried about whether or not they're securities and whether or not you fall as a trade signal provider, whether you fall into that classification as an investment advisor that require registration, the publisher exemption is where you have to go, right? The publisher exemption, if you follow those 3 tenets, are what's going to obviate your need to register as an investment advisor, which is sort of a cumbersome and can be costly and time-consuming ordeal. So again, think of the publisher exemption. Also, the fundamental question when you go into it is, what am I actually giving the trade signals on, right? Am I giving the trade signals on a commodity or a security? We're talking about securities here, Investment Advisor Act registration, and whether that's applicable. My next video, I'll discuss the commodities end of it, which is a little more in depth and probably a little more apropos to most trade signal providers out there. But if you have any questions, hit me up. I'm Adam Tracy, Tracy Firm, TRACY, firm.com, at tracyfirm.com. Info's below. I'll talk to you next time. Thanks.